you are having a hard time trading the NASDAQ futures because one, I don't think you understand how big the true range is on it. Even when you're trading a small time frame like the 5-minute, the NASDAQ can move definitely 15 to 30, even 35 points in one particular candlestick. So if you don't truly understand your risk as far as how many contracts you should be trading based on your account size, it can really start to, weigh in on you and cause you to stop out of trades a lot more than actually letting the trade go to full maturity. I want to show you guys exactly what it is that I'm talking about here, because this situation I feel happens a lot, right? I feel the situation happens a lot, and you are stopping yourself out only to chase the trade later, or maybe just not at all, and then coming back to the charts and being so mentally frustrated that the original trade that you were in worked out perfectly, but you're asking yourself, why did I get out of the trade? So let me show you this particular, based on my strategy, let me show you this particular setup. We're looking at the 5-minute time frame. We're looking at the NQ. What we're looking at here is at 10:55 Pacific Standard Time, we go from trading above on a very, very phenomenal day, to be honest, to the upside, but we go from trading above the 20 SMA to now losing the 20 SMA, okay? So if you are waiting for the confirmation here of this low wick, this is below the 20 SMA, it's below the linear regression. We have our pivot sitting here at around 14,788. So all we're waiting to have happen is just that new low get confirmed. Now, here's what you are doing and why you're losing too much money, blowing up accounts, and why you are getting auto liquidated out of these prop firms, because you're not letting the trade go to full maturity. Okay. So what's happening here is you're getting so excited about the trade and you see your setup happen. You get short. It goes from a price of 788 down to around 785, which is just 3 points. A lot of you guys, this move is going to happen so fast that you're never going to take profits on that, okay? So what tends to happen is, let's say, for example, you're trading 1 or 2 minis, right? Not that much risk. Now this goes immediately 3 points in your favor to immediately spiking back up and closing over the 20 at 806. So this is around, right? This is around a 15 to 20 point kind of pullback, right? So this 15 to 20 point pullback could be somewhere in the realm of $400-500 on one contract, let alone if you're trading two, could be upwards of $800 to $1,200 in the negative. So it's at this point where you personally are trying to mitigate risk and you're trying to protect yourself, and you thought the trade was going to go in your favor and it quickly didn't. So you cut it for a loss. And then when you see this candle at 1105 confirm back over the 20 SMA, you get back into the trade, right? To the long side, because you think that the move is going to go in your favor. And then it starts to pull back. And when it starts to pull back, you already have it in the back of your minds that you're down 400, 500, 800, 1,000. So you quickly sell out of this trade. And then you let the trade continue to go, right? You get out of the trade and you're watching the candlesticks only to see that your initial entry at 788 starts to trade down towards 763, immediately a 15-point move. And then you look back later and you see it trade all the way to 700. So essentially you lost out on an 80-point move that you were already in due to the fact that you're prematurely stopping yourself out of trades. Now, this is coming down to a couple of things. One, you do not have a good risk management plan. You do not understand how many contracts you should truly be playing based on your account size. This is one thing that I work on in Evolution Traders. So if you guys want to join the private mentorship group, that group is down there. We can sort out your position sizing. Two, you are getting so antsy to make money that the moment it goes against you, you completely let your emotions get to you, right? And then you start chasing every single candlestick, and the candle's moving up, so you want to go long, and the candle's moving down and you want to get back in short, right? So a lot of this stuff has to do with emotions, right? because understanding and letting the chart play out is not that difficult if your risk management is in place. Now, even if, let's say, for example, your risk management is in tip-top shape, meaning you are not trading too many contracts for your account size. And let's say, for example, I'll use micros as an example because I tell everyone, start off on micros, please trade micros, especially if you're on a prop firm. But let's say, for example, you're trading 2 micro contracts, right? Not a lot of risk. Even with that, looking at this trade bounce against you, almost 30 points on 2 micro contracts, you'd be down around $120, right? Give or take, right? So maybe it's 80, maybe it's 150, just give or take, right? Let's say you're down around $120 or $100, something along those lines, because depending on where you got filled, slippage, when you pulled the trigger, let's just say you're down $120. Now you're realizing that, you're trading small size. You don't want to take the loss only to see it go 80 points in your favor when technically you sold at $100 loss. You should have technically sold at around $300 winner, right? So you should have won $300 on this trade. Well, how do you know where to take profits? Well, as we come down closer into this demand zone, you want to start locking in those gains. As you start to get a reversal candlestick and you have a green taking out red, you want it to get out of this trade. So there's some things that I teach at Evolution Traders, how you can start to look for ways to take profits. But let me explain something to you very, very simple. This short setup should have never been exited at all. As long as your risk management, meaning the number of contracts that you're trading, is okay, you should have never exited the trade whatsoever, because you never get stopped out, meaning we should have never tried to take the long trade when essentially we never had a candle take out and close above our reason why candle. So notice our reason why candle, right? And if I was to draw a line over our reason why candle, this 1105 candle, yes, in fact, does wick over. So this question has been brought up before. Well, the 1105 candle went over my 1 bar, so I got out of the trade. I've heard this so many times. I got wicked out of the trade because it was over the reason why candle. It went over that initial candle. And the question that I ask is, did it close over or did it just wick? Well, it wicked over, but I didn't want to lose any more money. But is that following the edge? Is that following the plan? The answer is no, obviously, clearly, because the edge says that if we wick over, we don't get out of the trade. Well, what if it goes up 30 or 40 more points? Then that's the name of the game. Like, there's nothing you can do about it. It's at that point in time, how much are we down on the additional 20 or 30 points? And is that hitting our daily max loss according to our trading plan? Right? So maybe we could have stopped out for a $100 loss and we stopped out for a $300 loss. Well, in our trading plan, we should have something like, if we lose $250 trading 2 micros, we're calling it a day. So we lost 300, we've got to call it a day. And we move on to the next day. It's not try to trade it back because the setup ended up going in our favor later. No. So in this particular case, it never closes over our 1 bar stop. Yes, over the 20, yes. Over our 1 bar max pain stop, no. Does it take out even the previous high? No. Does it take out the high of day? No. So as we put in this high of day, you need to start reading the price action and start reading the room accordingly. We put in this high of day, pulled back, we bounced, we put in a lower high. Here's our setup here. We bounced. We put in a lower high. This is telling you we're going lower. Okay. So you should have held through this. Now, again, if you're playing 5 mini contracts on a $50,000 Top Step account or a $25,000, $50,000, even $75,000 Apex account, you're stopped out on the day. You're auto liquidated. You just lost your account. And the move didn't even have enough time to go to full maturity or true stop out. The only thing that was wrong with that particular trade was you as a trader were over leveraged on this particular trade. Now, again, the amount of contracts that you trade, because of the system and the edge, it's not a predetermined at 5 points, at 10 points, we're going to stop out. No, we don't do that. This is the NASDAQ. We have to trade levels. We have to trade supply and demand zones. We can't give the NASDAQ 10 points stop out or work. No. So some trades might have a 10-point stop loss. Some trades might have a 30, 35, 40-point stop loss. And you may be thinking to yourself, well, how do I manage that risk? Your risk gets associated with how much potential drawdown could be incurred if you hit max pain. So in this particular case, our initial entry at 788, our max pain at 815 is around 30 to 35 points. So I do the math like this. If I'm going to incur maybe a potential 30-point loss, one micro contract is going to put me at a $60 loss. Can you stomach that? Yes or no? The answer is yes. How much risk would a two lot incur? $120. Can you stomach that risk? If the answer is yes, let's go to 3. If that risk is going to be around $160, $150, $180, can you incur that? And if you start to say, well, I don't really feel comfortable losing 180, then the number of contracts that you should be trading is 2 max on this particular play. If you're okay with losing $120 potentially on this trade, then you need to be okay with only playing 2 contracts, nothing more. But what about if it goes in my favor 50 points, and if I was playing one mini, I would have made all kinds? You're not ready to trade one mini because you're not ready to lose more than $120 a trade, right? So it all depends on how much you're willing to lose. Your account size on some particular plays, you might have a stop loss of 15 points and not 30. So instead of 2 contracts, potentially you can play 3 or even 4 contracts. That's how you mitigate your risk and you practice good risk management. You always are going to know potentially where your max pain is at on any trade. We are never chasing candlesticks. You know, we're never chasing candlesticks and just, oh my God, we're going red, we're going red, we're going red, I'm going to get short. No. You already know what your max pain is going to be. Look at this potential 20 place setup to the south side that was at 774 and the top wick was at 799. Let's just call it 800. This is a 25-point stop loss. So if you're trading 1 contract, you would potentially be losing around $50. If you were trading 2 contracts, you would potentially be losing around $100. Are you okay with losing $100 on a trade? If the answer is yes, ask yourself the question for one more contract. Are you okay with losing $150 on a trade? If the answer is yes, then let's trade 3 contracts instead of our normal 2, because our stop loss is not going to be 35 points. On this particular play, it's only 25 points. Do you see how the risk management starts to work? So a lot of you guys are blowing themselves up in losing trades because you're not understanding the amount of risk that's involved per trade. Every trade is different. Sometimes you get a 50-point candlestick and you have to tell yourself, if this pulls back and it doesn't work in my favor, I'm going to be losing 50 points. Is that something I want to put 5 contracts on the table? No, but I'll put 1, right? I'll put 1. I'm not going to make that much, but I'm also going to protect myself, because at the end of the day, it's all about protecting yourselves. Guys, I hope this video helped you guys. If you want to join the private mentorship where we can deep dive more into position sizing, we can dial in a trading plan specific to you, access to one-on-one course coaching, get access to the coursework, get access to the live trading each and every single day with the community where you can talk in real time if you choose, or just listen, doesn't really matter. If you want access to that, that link's going to be down in the description box below. I'll catch all of you guys on the next video.